What's going on, goats? My name is Raymo, and welcome back to BooKoo Bucks. Today, I'll be breaking down my trade on oil futures from this London session. So let's first start off on the higher time frame to get my higher time frame bias. Ultimately, I was really noticing that price was in this compression channel-like pattern, and when I see this, I have a good understanding that price is building up liquidity on the downside, sell stops, and liquidity to the upside in the form of buy stops. Usually, when price is compressing upwards, there is usually a spike to the downside to take out sell side liquidity. So, although I don't know exactly when price will do this, I am anticipating price to do this, right? So I'm kind of anticipating price to go bearish. So this is reason. So this is the main reason why I was looking for these short opportunities. Going down to a lower time frame, specifically on the 4-hour time frame, we've seen that price actually broke underneath this 4-hour low. So potentially this could be a break of structure, a sign that price wants to go bearish and make a lower high down to a new lower low. So with that being said, I pulled out the fib from swing high down to swing low and look to see where price was. Price was above the 50%. So technically this is premium. So this is a good area to look for shorting opportunities. At the same time, I did zoom into a lower time frame to see what is price mitigating, if anything. If price is mitigating a high probability order block or POI, then I will continue looking for shorts. If price is not mitigating anything, then most likely I will not want to continue looking for shorts. So I believe I found an order block on the 15-minute time frame. Ultimately, we can kind of mark up this entire buy to sell move or go down to a lower time frame to refine it a bit more. For example, actually technically it would have to be this same exact move here. Either way, you can refine it a bit more, but either way, price does take out buy sell liquidity. This order block is in premium, and we could utilize this as a high probability continuation order block. So dragging this out, we can see price did mitigate it once, and then price actually utilized this high as buy side liquidity. Price is still sweeping it, or price is sweeping it and still mitigating the order block. Price doesn't have to drop off the first touch nor the second touch. Price can mitigate the order block as many times as it would like to. As long as price is maintaining the order block, I will go ahead and continue to utilize the order block. But until price actually breaks above, once it does that, then I will go ahead and throw this POI out the window. But nonetheless, let's go ahead and clear up this chart real quick. Price took a buy sell liquidity, tapped into the order block, and now I was down here on the lower time frame. I think at this point I was mainly on the 15-minute time frame, doesn't really matter. But here we have a low being broken, and price made a lower low here. And I was looking at this as a change of character, I believe. I have to say chain of character because this is not the true structure low. This is an internal low up to the side. But either way, price comes in. We have a failure to make a new high off of this extreme order block, and then price made a new lower low. So at this point, this was a good sign that price wanted to go bearish. Price made a new lower low, and it failed to make a new high before even doing that. So at this point, I was drawing my fib from swing high down to swing low at the time, looking for price to come up into premium and looking for shorting opportunities. At the time, I believe I did mark up this 15-minute order block. It is on the, or it was on the live session, I should say. And I did like this order block a lot because this is a continuation order block that is in premium and also takes out buy side liquidity right here. So I was monitoring this specific area, looking for shorts, but going down to the 1 minute time frame, there was no entry model of my liking. So when price made a new low, all I simply did was is work with the new range. So I went ahead and deleted everything just about, so you can keep it on if you want, but just for educational purposes, delete everything. From here, I used this swing high down to this new swing low, and I repeated the process. I went down to a lower time frame. I noticed that price took out buy side liquidity here, and this order block is resting in premium. So this was a high probability continuation order block that I could use just like that. And of course, we can have an extreme one as well. But for this one, I was utilizing the continuation because obviously it respected it. And here we've seen some equal highs resting above here. Price swept those equal highs, tapped into the continuation order block, and price began to fall. Honestly, here I was down on the 15-second, even the 5-second time frame, trying to find an entry, some type of breaker structure. Here, we can see that price technically didn't break underneath this low here. And you can see price broke underneath this low, but this low did not make the new high. So I technically couldn't call this a 15-minute breaker structure or a 15-second breaker structure from this high, or sorry, from this low or this low. So ultimately, I was looking at this as a change of character. I seen this and I was trying to use a fit from high to low, but price was not pulling back up here into premium. And then once again, I don't even think I actually drew a fit from this high to low. You can see price got to the 50%, but did not get up into premium. But the main reason why I decided to look for shorts is mainly due to the 1 minute time frame. We've seen price take out the equal highs. Price gave a nice impulse to the downside. We have some type of 15-second break of structure. And also, one thing I've been trying to keep an eye out for are fair value gaps. Looking at price here, there is nothing to fill, meaning there are no fair value gaps up here, meaning price is basically balanced and there's no reason for price to come back up to here. But if you notice like something here, we have a fair value gap sitting right here and price comes up to fill it basically to the T. It won't always do this and sometimes it will run above. But what I'm trying to say is I had that 15-second chain of character. 1 minute took out buy side, and there was no fair value gaps to fill in this area. So I decided to take a short because I really did not think price was going to continue to go on higher. So my entry was 62.79. Let's go ahead and plot that exactly where it was, 62.79. And I believe I had a 10-point stop loss somewhere above here. You technically can put it above this high over here, but again, I decided to do this because usually on oil, I do like using a 10-point stop loss. But also, too, like I said, I did not anticipate price to come up higher. There was nothing to fill in terms of fair value gaps. And then since I was bearish, I was looking for price to run on lower, of course, but I was looking left for some sell side liquidity. And right here, this was about a 1 to 6 RR trade setup that I was looking for. As price just went in my favor, we've seen price made an M1 high, M1 low, lower high, lower low, lower high, lower low. Things were looking great. And even here, price made a lower high down to lower low. In this case, I believe once price made this new low here, I put my stop loss to break even. And then as price was down here somewhere, I wanted to capitalize or secure some profits. So all I did was I moved my stop loss into a trailing profit. And I believe I put it at the 62.59, 62.59 right here, which gave me about 20 points, I believe it was. So I was able to capitalize at least on a 1 to 2 RR setup. If you don't know what I'm saying, let me put it back to 10 right there. And then if I pull this up here, that 1 to 2 RR setup is what I'm referring to. So I was looking to capitalize at least on a 1 to 2 RR setup. And for some reason, I don't know if this was news or what, but we had a huge spike to the upside that triggered my trailing stop, and then price ended up pushing on lower. So the good thing is price did go in my favor or did go with my bias as price did push on lower. Unfortunately, price did cut my profits a little bit too short, but also good thing is I was able to trail my stop loss because if I kept it up here at the 10 points, price would have literally ticked me out barely and then pushed on lower. So that is it for this oil trade setup. If you guys have any comments or questions, please let me know. Thank you guys for watching, and I will catch you guys in the next one.